Good morning, everybody. This is Jeff Scott. It is actually, I guess, the 5th since I didn't get this done last night. But since today's a holiday and the market's not open to tomorrow, I kind of feel like it's a Sunday anyways. This is my top-down review for Labor Day week. And my title is Jobs Number Disappoints and Bulls Rally. Disclaimer, as always, this is for education purposes only. Any recommendations on this sphere of education, not investment advice. I'm a doctor, not a broker. I'm not affiliated with any software vendor or trading company. Any tool I use, I paid for, and trading involves risk, and you alone are solely responsible for any investment decisions you make. In addition, from time to time, I do talk about options and taking options trades, and I just want to emphasize that options are even more risky, and you shouldn't be trading options without a good options education and understanding the potential consequences thereof. Spend some time on this every week. A marriage of two styles. I learned from Ian Woodward initially how to trade. Ian is a disciple of William O'Neill. Took O'Neill stuff, partnered with HGSI to make it electronic and improved upon it. Ron Brown is Ian's partner. Ian recently passed away. He is missed. Morales and Catcher have written some great books. They used to be money managers for O'Neill, and I learned a lot from them as well. And then I really accelerated my skills and my successes when I started mixing that with some of the more practical, when to take the trade, when to get out, top-down style of John Person. John is a friend of mine today. In the beginning, he was just someone whose stuff I bought and who I listened to on a lot of educational programs and been to a lot of live meetings. John's a teacher, trainer, mentor, software developer, and just a great guy. A couple of great books right here. I believe the yellow book is actually in the process of being updated, and that will be great to read that again. I really like the green book. Don't let what you think about what he does, futures, forex, day trading, those ideas scare you. John is a swing trader of stocks. He does hold a very active room that does talk about futures in it. Only time I see him talk about forex is in the setting of currency futures. But what he really trades is stocks and options, and his time frame is very much a swing trader, and he has a top-down approach. Van Tharp in money management. George Lee, buddy of mine, having another meeting in Southern California come October. I need a lot of things on my desert island, mostly my wife and internet access, and if I got those two, then I'll bring a computer, because if I can get TradeStation, Thinkorswim, and HGSI and EdgeRater, I'm fine when it comes to trading. I supplement that with seasonality analysis. Right now, the one I use the most of is probably Seasonality Trader, Magenta. I'm not going to go into the divorce that they had from the Seasonality Trader folks, but Magenta keeps improving, and then Best Choice, probably most excitement is there, and that Best Choice will be coming out with a cloud-based, web-based version shortly, which will be an update. That program probably hasn't been updated since the days of DOS. Each of us needs our own tools. You use the tools that work for you. These are the ones that work for me. If you don't know highgrowthstock.com, here is the website. A couple of important clicks. A free 30-day trial. That 30-day trial is really free. They don't even ask for your credit card. And then if you go under investing strategies, you'll see my name. You'll also see the name of Ron Brown. Ron is really does a lot of work for the community, both free and sometimes paid. And he has a lot of videos that show you how to practically use HGSI. This here is Gil Morales, who's actually one of the users, one of the guys from Morales and Catcher, ex-O'Neill trader. Pretty soon we'll be taking these slides out because we're getting close. Those of you that have paid for my meeting on Friday, you'll get something from me in the next 5 days, just reviewing the agenda. We are at the Hilton Garden Inn, the same place at John's meeting. It will be breakfast starting around between 8 and 8:30, probably 8 o'clock. Meeting starting about a half hour later. It will be an all-day meeting. If you have questions, my email address is hgsidoc@gmail.com. My section will be heavy HGSI and how I integrate it with other products such as John's work. John's section, I may speak in that if I'm invited, and I would anticipate speaking most about how I use John's stuff and how I've taken my other trading to a new skill set. Stock patterns are cyclical. You know, it's interesting. If I had to tell you where I thought the market was today, the market on Thursday was sitting here. On Friday, it bounced, and it almost feels like every major index is in a squeeze. Many of them had kahunas on Friday, and it feels like, even though I think we're remaining in a topping longer term, I think we got one run up, and as those who listen to me think, you know, that I've been saying blow off top. I wonder if this isn't the beginning. We'll see. AD lines are strong, OBVs are strong, and you'll see some of those patterns. When you go sideways for a long time, and we've gone sideways for a record-setting number of days without a 1% move, I think you clearly are compressing a spring, and when it goes, it's going to go hard. Now, the problem is a spring can go up or it can go down, and just because I think this market's going to blast off to the upside, what do I know? And by the time we get to tomorrow morning at 8:30, 9:30, I might change my mind. So that's just based upon this moment right now on Monday morning of Labor Day. So what does that mean? It means that if I think this market's going to blast off, I'm looking over here because we're going back into a markup stage. And so I'm going to be looking to go long. I already went long on Friday, added to my longs, covered some short positions. Friday was an interesting day. I mean, if you owned IVGO without having any put protection on it, you got slammed. Ambarilla slammed. You know, I had puts on them, but I lost a little bit of money on them because, you know, puts have a premium that you pay, that have a out of the money component that you're paying for, an in the money component that you're paying for. But on some of these high flying tech stocks, even those that I have a cushion in it, I don't mind paying a little insurance just like I pay it on my life, because it's a lot nicer to go to sleep with a little loss on a stock that dropped hard and not a big loss. If you look at the sector review, you'll see how strong Friday was. Some weakness in biotech, weakness to mixed. Healthcare again, weakness to mixed. But then you look around the rest of it. Now I'm just going to point out a couple of things. Look at the sectors here. All the sectors are green. Biotech is not one of the S&P sectors. It's a breakout of that. And so that would be the only one there, or the first one that's red, as was a semiconductor ETF. But technology was green, as was healthcare. Gold was green as well. Home builders, for the most part, look great. Williams & Sonoma, kind of a retailer with a home builder mentality, or home furnishing mentality. Materials showed some strength. Energy, oil, gas production, oil service, financials, insurers, broker-dealers, industrials. Technology, a few pieces of weakness, but mostly strong. Same with semiconductors. Staples had a nice week, a day. Discretionary, retail, mixed to strong. Utilities were strong. Take out a few healthcare stocks, even transports, especially the airlines, were strong. REITs were strong. And then foreign markets were strong. So this was a strong day on Friday. Now, was that a one-day wonder? Or does taking an U.S. Rate hike off the table change things so dramatically across the market as a whole? If I look at the major markets, ignore the little nub on the end because there was some late night futures trading overnight, which traded slightly positive. Oil right now is up about 72 cents, I believe. So first thing is, you know, we've had a positive week, or a positive day on Friday, you could see. Still in a sell signal on daily. And this here is the E-minis. The next one is the NQs, then the YMs and the TFs. So except for the TFs, it looks like we're in a daily sell signal on John's indicators, which is the yellow. This is think or swim. But we really haven't done much to the downside since those sell signals came in. We continue in this prolonged, relatively flat period. The VIX ran up, failed, and is heading back down. And the dollar is struggling to get above its 200-day moving average, which is about a 40-week moving average as well. If I look at the weeklies, and again, ignore the nubbin on the end, you could see that although we've been going sideways here, it was after a nice run-up. So if I want to be bullish, we've had a very big run-up off a double bottom here, and we have consolidated at the highs, and it has been a consolidation after a run-up, which frankly could be somewhat healthy. And one can see the dollar struggling and the VIX being the VIX, which means low. Here is my Genesis charts. Now, why do I like Genesis charts? The seasonality in Genesis is actually pretty cool. I don't talk about it much because I have other programs, but I can drop seasonality on my regular charts. So when I flip through stock charts, having seasonality on it's been a positive thing for me. It does some scanning and some intra and end of day things with scanning and their version of radar screen that I can't do in the other programs. And I also use it because I've got John's indicator package in it as well, and I've gotten used to some of the things. Interesting thing, Genesis uses a different algorithm than TradeStation, and it actually went to buys on the E-mini, that's this column, buys on the NQs, which is this column, buys on the Russell futures, TFs, which are here, buy in the NYSE, and buys on the YM, which is the Dow futures. So this one acting first, and you could see daily across the top, weekly and monthly. And what a great way for me to look at and get a sense of what the overall markets are doing. Now, during the day, I drop the monthly and I add a 5-minute on top, and that gives me a pretty good sense of what's going on minute to minute. And frankly, I will, if I'm sitting at my computer and doing some short-term trading, I take their signals very seriously, John's signals in Genesis. So a little bit of background. What was interesting on my review this week, not only were all the squeezes in the major indices, but the fact that both interest rate sensitive stocks like utilities and REITs were strong on Friday, as were banks. So either confusion or nirvana. I think it's probably confusion. Falling rates are good for REITs, MLPs, utilities, dividend payers, and home builders, and they all were strong on Friday. Rising rates are good for banks, especially regionals, and clearly regionals over multinationals were strong on Friday, as were insurers. So if we look at the 10-year Treasury yields on the left, the 30-year Treasuries on the right, you can't see much. They didn't do a whole lot this past week. In fact, they were both, I think, down a few percent. So Treasury yields had bounced off the bottom, and now they're basically consolidating that. Didn't really give up much of the gains, but interesting to see the responses in the various markets. Why might I be bullish? So for the next series of slides, the white line is what we're looking at as the topic. The yellow line is the S&P. And the first thing is, if I look at AD lines on both the small stocks and the big stocks, we're at all-time highs. And price and accumulation distribution, advanced decliners, sorry about that, wrong AD, are both going to new highs at the same time, bullish. If I look at breadth, and the little arrows here represent where the end was, the stocks above the 200-day SMA have gotten above a point where we start to reverse. So this is we'll give it a demerit of the market as we are getting extended. Yet on a more shorter time frame, now the stocks above the 40-day pull back off of a reversal area and actually moved up a little bit this week. So breadth's improving, longer term becoming oversold. Now, for those that are wondering what chart platform I'm using here, I use a lot of things. This is Telechart, and there's some things I really like about Telechart. Maybe someday I'll spend some more minutes on it. Nothing beats HGSI, and even TradeStation, Thinkorswim, Trade Navigator, Genesis, Ninja Trader. Nothing beats it from a scanning and planning perspective where I'm able to do end-of-day analysis. But some of the charting things that I can do other platforms like Telechart are useful. So I basically set these. They pretty much run automatically for me every weekend or every day if I want to look at them. 3-month new high, new low. The way I look at the 3-month new high, new low is it's a... Oh, it's funny. My Siri, every time I do a talk now, Siri hears my voice and starts doing things. Let me just turn off my iPad. Very good. So the 3-month new high, new low, it, to me, is a very interesting thing to look at. It only looks at about 13 weeks. And every time the number of new highs versus new lows gets to this level, it reverses. And we're close. We're not there yet. So another demerit that says maybe we got to blow off top and then this market takes a breather because we are getting oversold by this indicator as well. The daily McClellan, I don't know how to really say here. New highs on the market. We did break above the zero line on the oscillator, while the summation index is heading down. So I guess that plays into that 40-day SMA piece, which says that although overall I guess we're doing fine, there is still some less participation. If I look at the weekly, same type of a picture. We did break above zero on the oscillator, struggling at that area on the summation index. Buckets. So the buckets are something I do in EdgeRater. EdgeRater is a great standalone program. I also use it as an adjunct to HGSI, both for finding stocks as well as for measuring strength of markets. One of the things I look at is the buckets. The buckets basically takes the S&P 1500, stratifies them within the Bollinger Bands, who's above and who's below the midline. 55% a week ago, 65% of stocks are above the midline in the Bollinger Bands, which is more bullish than it was a week ago, but not at an extreme. Then I start to look at how many stocks are above the upper Bollinger Band and below the lower Bollinger Band, and you could see we've clearly shifted to the right, and not yet extreme, but about 13% of the stocks are above the Bollinger Band. I've seen that number go 30 or 40% or higher. And unlike the opposite, when it's below the Bollinger Bands, it doesn't necessarily mean an imminent correction, but it's certainly something that, again, another demerit, as bullish as I am, just showing you how overbought we are in this market. There is no evidence of a Hindenburg, either using the NYSE or the Russell 3000. The Hindenburg is a signal that one might expect to fire before a major market move to the downside. Now, it did fire a couple times earlier this year. When I look at, this is back in, I think, June, when I looked at the Russell 3000, trying to figure out if perhaps the reduction in number of overall stocks, the increased bond funds and interest-sensitive stocks in the NYSE, did that change anything? But really no evidence of a HINDY today. It hasn't been a HINDY for quite some time. These are back in May as well when it fired. But that was on the Russell 3000, not the classic NYSE. Bulls attempt reversal. You could see these blues tell me that every major bullish index that I track had a kahuna on Friday, a kahuna being more than a 0.24% move in the percent B on that index. On the percent B, started to move as well. Very short-term bullish. This one here is the Woody indicator, still mostly red, but you got to start a switch somewhere, and often this shot of kahunas across the bow is enough to ultimately, in the next couple of days, switch the market from a bearish sentiment to a more bullish. So we'll be watching that. Canaries in the coal mine. This is another place that helps me be a little bit more bullish. This is just an index of some big leaders, and it's an index that I follow every week because these stocks have run the market for quite some time now. Obviously, LinkedIn is being taken out, so that's going to have to come out. Tesla has been just horrible. So I might look at this and wonder, are there some new stocks to put here in their place? However, I have to look at what I've done historically, and we are basing at an area below prior highs, but we did have a mobile breakout from a squeeze, a pocket pivot, and a kahuna last week, a PSAR reversal. And if there ever was a time that I felt that these were getting ready to break out, it's now. They are stalling. They don't break out until they break out, but consistent with my theme that we may have another run to the upside before, frankly, before the election and news stuff pull us back down, which I think is in the cards as well, but let's stop guessing and start looking what the charts show us. Know your news and earnings dates. This is going to be a much more quieter 4-day week. We do have some claims on the 8th, initial and continuing. There's always some energy numbers, some inventories, jolts, etc. And if you look at the earnings, of course, if you have one of these earnings, exactly Vince, Restoration Hardware, Korn Ferry, Cons, the electronics retailer that is not Best Buy. I guess I'll just put it that way. Quite a few things, Casey's General Stores, Dave & Buster's. So there are plenty of stocks with earnings. And in my comment that I make every week, it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. Market thoughts, a lot of them here. Jobs disappointment on Friday pre-market led to a broad-based rally day. Major indices appear poised to break out, I think, to the upside. Breadth is improving, at least from the shorter term time frame. Dollar moderates as a chance of a September rate hike dissipates. That's good for potentially oil, gold, silver, which have been beaten up over the last couple of weeks. Interestingly, interest rate sensitive sectors led a broad base of interesting chart patterns when I looked at charts over the weekend, while selective strength was also seen in the financials. Bullish signals overwhelmingly dominate on the scans, which is a sign to me of a potential impending blow-off top, or perhaps it's just complacency among traders. News and Fed speak likely to dominate as earnings season ends. I just want to make one additional comment. It is very difficult to short and make money in a flat market. This market is going to roll over. Yes, I am bullish right now. Yes, I am more leaning today on Monday when the market doesn't trade towards a little bit of a bullish move up. I am still believing that this market is going to correct going into the election. I think that the other news and concerns about the candidates, concern that the Democrats could take both seats, chambers on the Hill, although they're likely only to take one. I think that is the wall of worry that we're climbing. At some point, I worry about the news and increasing Fed speak as earnings season ends. There's still a lot of people that think we're going to see at least one more rate hike. And once we get over the euphoria of a weak jobs number, that's going to come back in with Fed speak. Usual agenda. First chart of the week from last week. These are stocks I present for education purposes only. Trading, especially options, carries substantial risk. I don't warrant. I may already own or take the trade. And I'm doing this not to provide stock tips, but to show you how I find trades, why I chose a specific stock, and how I'm going to trade it. This is Amazon. This was my pick last week. Why? Everything was turning green. Mobile breakout from a squeeze, sitting right underneath its PSAR dot, a pocket pivot, and a kahuna. When I looked at my Johns indicators, I saw a stock that's been an uptrend weekly with strong OBV. I saw a stock again squeezing here. This dot meant it had a mobile breakout and a pocket pivot and a kahuna on Friday last week. All my bongos were green, and I had a fresh new buy signal come in. So I put my plan, assumed a risk of 2,000. I was only going to buy 100 shares. So I'm up about $300 right now. As I took the trade, the stock's about a little bit over 772 right now. here is the buy point. It never really sold off at all last week. It just oscillated around the buy point. And on the day that the market ended the week for, it was actually up above the buy point. And you could see here that weekly it had a very small positive week. So we're in it. We're holding it. Small gains. I feel I should consider taking my stock up to the lowest in the last 3 or 4 bars. I'm not going to, only because the stock can have a 10, 12 point intraday move, stop you out, and then keep going up. And so, think 2% on a $7 stock is 14 bucks. So I'm not going to tighten my stop up. It's already pretty tight. I think it was 2.4% when I put it in. We'll come back to the next chart of the week in a few minutes and why I chose it. All right, so next thing I like to do is jump into TradeStation and just take a quick look at the state of the markets. Again, I do what I do. These are my webinars. I incorporate the things that I like to incorporate. I know that I don't incorporate just one trading philosophy, and that probably confuses people. But as I said, these are my webinars, and I do what I want to do during them. So I'm looking at 5 things as I look at the markets here. Number 1, I'm looking at, is it in a person sell or a person buy? And TradeStation, like Trade Navigator, went to a buy signal on the S&P on Friday. The second thing I'm looking at is, where is my price in relationship to the Elder Auto Envelope? One thing I've learned is it has a tendency to track up or below the envelope, but when it gets at this far below the envelope, it's almost a guaranteed reversal within 1 or 2 bars. The third thing, which is actually the second thing, the envelope's the third thing that I look at, is the color of the paint bar. Green means is a sort of a filter that Elder uses. If it's green, he can go long or hold. If it's red, he can go short or hold. If it's blue, he can do anything he needs to do. The fourth thing I'm looking at, 1, 2, 3, is whether or not there's any evidence of divergence in the MACD, and I have a scanner from Elder, which are these red dots. And again, as I've said before, they can fire for several days or weeks in a row, but typically it's when we start to get extended and we're at risk of a pullback. And then the fifth thing is, where are we at on the high jump? I know when I'm above 90%, 95% especially, that the market is extended. So very quickly, S&P, buy signals throughout, green on the daily and the monthly, blue on the weekly, that's fine. It's in the middle of the range, sorry about that. No issue of a high jump. And it looks good throughout. The S&P is strong. It looks to me like it wants to go higher. I hope your dogs are not singing to my dog if they're listening. The NASDAQ, a doji on Friday, but a buy signal, buy, green, blue, green, same as the S&P. We're at 90% on the high jump. We're a little bit higher up in the pattern, but still nowhere that says we're imminent to pull back. This can go higher. The Russell 2000, we'll look at the IUM for that. Again, it's been in a buy signal a little bit longer. The Russell certainly has been the strongest sector right now. Still blue on the weekly, but buy, green, blue, green. No MACD divergence. Not an issue with the envelope, and at 97. So there's one that is extended. So that's a little bit worrisome. That tells you that the distance between the price and then adding together a price to 50, price to 17, and price to 200-day moving average, comparing it to the last 200 bars, this is as high as the 97% of the highest number. And you could see back here, you can still run up a period of time when you're maxing out on the high jump, but typically this level is associated with a pullback. So we'll have to watch that. And then lastly, NASDAQ. NASDAQ, we looked at the Dow. I forgot what, I'll get this straight. I know it's in here somewhere. Here it is. The Dow Industrials, buy, green, blue, green, 79% middle of the channel. Certainly looks good as well. Notice that these red dots up here, again, those are a MACD divergence scanner. It doesn't mean that the market's going to roll over tomorrow, but it's something to watch. And if I just What this is basically pointing out is that the MACD histogram has made a lower high despite the fact prices made a higher high. And so those that are MACD aficionados, of which I'm not, that might be something that would suggest reduced participation, reduced pressure on driving these markets higher. Now, take a look at oil here. Oil today is trading up some. Oil does not look as good as the rest of the market, does it? Blue, which is maybe promising if you're a bull, but in a sell signal on the daily, but in a buy signal on the weekly and the monthly. So maybe oil is going to give us a bounce, and oil did pull down to the auto envelope. So that's one thing. The dollar came back some this week, and really it's still in a buy signal daily, sell signal, sorry about that, sell signal weekly and monthly, in the middle of the range. If I look at gold, gold had a new buy signal on Thursday, but it's in a sell signal on weekly. So the dollar, the gold, the oil are more in the chop land, while those major market indices are breaking out. And then I also like to look at some of these sectors. They were all green. Healthcare in a sell signal daily, in a sell signal weekly. So healthcare weak. Financials, buy, green, 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 probably getting long in the tooth and extended at 99% on the high jump. So financials have been in a big, big positive run. They are getting frothy. Discretionary in a sell signal on daily, weekly buys. You see the MACD divergence on the weekly. The blue bars, maybe this is getting ready to revert to positive. We will see. Technology had been driving the market higher, still looks pretty good. Green, 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 so it's in a buy mode. So healthcare weak, financials extended, discretionary plus minus, technology looks good. Industrials, a new buy signal on the industrials. That's got to be good. Staples, new buy signal on staples, still in a sell signal weekly. Materials had been weak, new buy signal on materials. Maybe one of the strongest looking ones we got. Utilities, probably new buy signal there, but on a blue, still weekly in a sell. And energy, still in a sell signal. So I've now got a sense in my mind that financials are getting risky. Technology looks pretty good. Industrials and materials look very good. Staples and utilities looked a little bit better. I just get a sense of what's working. Now let's go into HGSI. In HGSI, I'm going to go into my my user groups, Woodward and Brown groups, Major Markets Plus, and I'm going to rank these by price and volume, weighted most to 1 day, some to 3 days, some to 5 days. Let's get a sense of what's working in this market. Mid caps and small caps up on top. That's good for growth stock investors. Volatility on the bottom, bonds on the bottom. Great news. Biotech on the bottom and big stocks on the bottom, not so great news. S&P towards the middle. Sort of a mixed picture. Small and medium stocks looking better than big stocks. And then I like to look at several of these chart patterns. You're going to see a pattern that's going to be the same over and over again. So what I'd like to do first is point out that every one of these indexes, and I'm going to leave this view on today for a reason, every one of these indexes, at least the markets, is going to have a kahuna. That's impressive. Many of them are coming out of a squeeze, that's the yellow, and their weekly bongos, which is my timing indicator, has been long going back to July with a short-term pullback, which the daily bongo looking for them to come out of that. So here's the S&P. Let's just dissect this a little bit. Bring up my drawing tools, red lines. So if we look from where we bottomed to where we ended up on Friday on the S&P, we are up 20% in 142 days. Not too shabby. If we took our peak here, which I think that's as high as we got, brought it down to here, we lost 14.5 and 68. We've had a number of small corrections along the way here. 4%. %, but we have come up to take out what we should remember are all-time highs. So we are at all-time highs. We had a PSA reversal on Friday and a move up. Let's clear these all out. In a squeeze with a kahuna. If this was a stock, that would be a buy signal. Pullback to support in an uptrend. This is a sideways pullback. It's even better. S&P looks strong, at least right now. The Dow. I don't want to sound like a broken record, except it's closer to support on the 50. Moved up on Friday. Kahuna in a squeeze. Long-term bongo, sell signal, green. Dow looks good. How about the NASDAQ? NASDAQ looks the same. Mobile breakout from a squeeze, a kahuna, PSA reversal, moved up off of support. And then the Russell 2000. Again, if this was a stock, that would be a buy signal. Mobile breakout from a squeeze, green up above, kahuna down here, and the 8-day exponential above the 17, above the 50, above the 200 simple. All these things look very buyable to me. I don't know the last time that I looked at 4 major market indexes and saw that every one of them was in a squeeze, had broken out from a squeeze with a kahuna. Again, that's kind of the signal I look for in stocks. Let's look at some weakness. How's the dollar look? Dollar ran up to the 50-day and failed. Now it's sitting right under there today. I'd like to see the dollar come back down and test its lows because I still have some energy positions on, and my portfolio goes up when the dollar goes down. So we'll be watching the dollar. Right now, I'd say dollar is not giving me a signal, but if we're not going to raise rates, the dollar's probably going to come back down some, or at least stop moving up. The VIX. Well, the VIX attempted to run up. It was blocked by the 50-day moving average. It's up a few points from where it usually falls to over the last several months. So the VIX looks like it's coming back down. Of course, gold and silver, they went and they did a split on the nugget. So people that were looking one day and seeing 130, the next day saw in the 20s, but that was a split. But look at gold. Why do I like the bongos? Let's just take a look at this from a curiosity perspective. Bongo went green here when gold here was closed at $106.15. It shifted to red at got up to over 115.62. So that was about $9, 9% move, 8 to 9% move. It stayed red until here, got you back in at close was 121, and it got you out up here at the close was 126. So was it perfect? Nope. But you got 14 points out of a potential from the breakout of the 200, 16 points. You did, I thought it's just a very slow, but it's designed, and that's this top bongo, the bongo weekly, to keep me out of bad markets. Tell me it's a bad market not to be in gold right now. Gold's got to break above the 50 for me to be interested. It's trying, and the dollar is weak in May, and it did have a kahuna as well on Friday. And then silver, which sometimes separates from gold, had a much stronger day. It's getting up to threaten that 200 right now. It did have a PSA reversal and a kahuna and a pocket pivot. So I did look at some silver stocks this weekend. I think the jury for me is still out on gold. But I would have expected these to have a strong day in the dollar a week day after that next rate hike was probably taken off the table. So now I've done that. Now I want to go down and look at what groups are making the biggest move right now. So I go down to industry groups. I have 172 now in HGSI. And over the last couple of days, you can see what's been moving. But I want to find momentum. Momentum is price and volume. So we basically look at a 2-day force to tell me what's really moving. I had 80 stocks, 80 groups of stocks moving up over the last 2-day force. And I contrast that to the downside with only 2 groups, cruise lines and steel production. And boy, I watched one of the ships coming out of New York to Bermuda going through the hurricane. I guess they can't cancel because of all the money they have to pay back and the airfares. But my God, who would take a cruise in the middle of a hurricane? Not me, and I love cruises. So when I've got 2 down and 80 pos up, that kind of tells you the market that we might be going into. Let's look really quickly. Metals, exploration, semiconductors, banks, oils, REITs, applications, internet media. So we have a lot of what are considered traditional growth stock groups in there. We've got some energy, exploration, integrateds. We've got services, midstream, renewable. Okay, so we've got a lot of energy groups. Metals right on the top, precious metals, and then steel raw materials. So even though steel producers were bad, the ones that make the raw materials weren't so bad. Let's take a look. Right click, change index group. So the first thing I noticed, which is weird, is they all behaved worse than the index. Now when I see that, typically I don't look very far. I want to buy stocks that are outperforming the index. But let's just take a look at a couple to get a sense of what they're going. We'll go for at least 3 because that'll take in the silver. I like American Barracks. I'd like to buy it here. I got to wait for some things to happen up above with Bongo. I need some more sell signals. Great uptrend, pullback, broke through support. I need to see some momentum. Right now it's right below PSAR dot. It does have earnings per share expansion. It's a big company, $8 billion plus in sales. It's trading at a multiple that's giant for a gold play, but less than its growth rate. Pays a small dividend. This was a leader up. It also fell pretty hard. I got to let it stabilize. I'd like to see it base or at least give me some momentum. Newmont Mining, similar growth story as gold prices have gone up, so have the earnings. High multiple, high growth, getting closer to the 50. Again, I'm looking for some momentum, and I'd like to see the Bongo improve. And if I want to see a good look, here's Silver Wheaton sitting right on 50, right below the PSAR dot. I just need some kind of a signal, and a signal might be a kahuna or pocket pivot. Show me some momentum is coming into this play. Again, here's another PAS, another silver play, good earnings per share growth, sitting on support, but I need momentum. So precious metals look like they want to participate. If the dollar's down, they'll be going up. Exploration. This one, God bless anybody that owns Resolute. It's made my watch list several times. It's just sometimes it's difficult for me to buy stocks like this. Now, when I see this, I'm like, wow, look at this earnings per share growth. And how could this stock be so cheap at $22 if it's going to make 70 cents, 75 cents the next 2 quarters, multiply that to $1.50. So it's really got a PE of only about 12, and it's growing 150 times. So I do have access to a lot of different things. People who know me know that I haven't met a service or something that I don't like. And I try out a lot of different things. I go to way too many webinars, and I got this heavy finger. I have a tendency of buying things I don't want. So let's just see if I can find out. So what I'll do when I see something like this, I'm going to go into one of my favorite resources for a earnings. I'm going to go look at MarketSmith. Let's open up my charts real quick. And as you can tell, I already did this look. And let's close this thing up. And what am I looking for? I'm looking, it's going to make 67 cents this month. These are crazy numbers. This tells me there was some kind of a split, a reverse split probably. I'm guessing there was a reverse split, or they wrote something off. But big loser, makes money, then goes back to losers, has a market cap of $340 million. So do I really want to be chasing after this fast cars? No. So I'm not interested in this stock, although every time I look at it, I go, maybe I should go down to an intraday chart and day trade this. But this is a small cap. It does have huge volume. I'm sure people are getting excited by the short-term earnings, but if you play it, make sure you play it short-term, maybe trade it on a 15-minute chart. Anadarko, here's to me, I like a lot better. Sitting on support right below PSAR dot, mobile breakout from a squeeze. Notice that I went green on my weekly bongo way back here. So you could have got in over here in the 40s and be up 25% already. This one looks like it wants to go higher. Group strength, mobile breakout, pocket pivot, kahuna. I might be adding APC to my buy list. Chesapeake, it's already broken out. Strong strength, looks nice. WPX, is this? I don't know anything about this. Tulsa, Oklahoma. Okay. Is already broken out and running. That looks pretty strong. There's the index. You know, you think about how, here's another stock, exact same pattern. Pioneer Natural Resources, ready to run again too. This is just expensive, but look at these earnings per share growth that's coming in. And it's interesting, not a big company. $3 billion in sales. Kind of curious. I shouldn't just look at the ones I want to destroy. So let's look at this one too. $0.84. So it's a pretty big multiple for my taste, which is why I'm not in it. I like the Anadarko Petroleum better. So exploration looks good. Semiconductor devices. There were a couple of big blow-ups last week in this group. Old name, Cypress Semiconductor, relatively affordable stock. Not much in the way of earnings per share growth, but if I ignore that, it's moving back up to recent highs, multiple pocket pivots, everything looks green. Marvel Tech Group, much stronger looking, all green, pocket pivots. And anything in here that I like? Look at a couple of these. Acalero is one I've been playing. Nice big move here. Cheap stock, everything is green. Again, 5 to 8.5 if I just took the buy when it went to a weekly bongo. Hint, hint. I scan every night. I look at all new stocks, all stocks that hit a weekly bongo, and I put them into a special watch list. Another cool thing in HGSI, if I remember, I'll show how to find them really very quickly. I love stocks that become green on a weekly bongo. That's where most of my wins come from. Great earnings per share growth rate. The other one I'm playing is Linear, which has been kind of spotty, but it pulled back to support. It's still all red, broke above the 50. This is one you might want to keep an eye on as well. Diversified banks. These are the big guys. Let's look for the ones that I actually follow. JP Morgan. You know, it's not a tight chart by any means, but you've gone from February lows to closing highs on Friday. You had a 28% move in 6 months, 6 or 7 months on JP Morgan. Not too shabby. JP Morgan continues to look good, especially if people think interest rates are going up. The minute they say interest rates are not moving up, it will fall. Someday these will become good stocks again. Bank of America is another one I have a pattern on, and I don't see Bank of America here. All right, we got Citigroup. Not quite as attractive as JP Morgan, just had a PSA reversal to the downside. And I'll just type in Bank of America, also in this group, and must have had a negative day, had a negative day on Thursday, stabilized some on Friday. All these things broke out above, but if we don't tighten, these things are probably going to have a hard time making big moves. Keeping in energy, integrated oils. Boy, Petrobras used to be a $4 stock. Oh, again, I don't want to be a broken record. Look what happened where my thing is. This is where you broke out on Petrobras. My Bongo Weekly went green. Had I come in and bought Petrobras at the worst price, at the highest price on the day after the weekly Bongo, Petrobras is up 77% in 127 days. This weekly Bongo is a great tool for keeping me, getting me in, and keeping me in a market. It is not early on the entry. It's not early on the exit. It catches the majority of a move, and it's a great filter. So would I get in Petrobras now? You know, they voted out the president. Maybe they're turning things around. Nothing bad happened at the Olympics except with our swimmers. Mobile breakout from a squeeze. Everything is green. Kahuna, great earnings per share growth. I kind of like Petrobras. Huge amount of debt. BP, stabilizing under the 50. Royal Dutch Shell. Petrobras of their Argentinian things. Looks like they're breaking out as well. Not as much earnings. ExxonMobil going sideways. I like Petrobras, and I think BP looks pretty good too. And this is what I do every night. REITs looked really strong this weekend. This was one of them, Crown Castle. Again, what do I like? I like stocks in an uptrend, pull back to support with a pocket pivot in Kahuna. What don't I like about this stock? The Bongo's green. Bongo's red here on the weekly. So I won't go in it. When is that Bongo going to turn back to green? It'll turn back to green where my arrowhead is once it gets above that 50, since I know it goes into a Bongo. So this is a stock that might become interesting when the Bongo changes. It pays a 3.7%. Kind of a nice basin here, Bongo, a pocket pivot. Kahuna, same thing. I need the Bongo to go green. American Tower, interesting. I like it. Uptrend, pullback to support sitting on the 50. The Bongo is green. Bongo kept me in this trade if I was in it. Got me in the trade back here somewhere. Kahuna, pocket pivot, PSA reversal, mobile breakout from a squeeze. Bongo is green. This is at a good buy point, American Tower Corp. Same thing with Prologis. It's above the 50, broke above the 17, green, and a Kahuna. A lot of things I like. This is too deep in the pattern. And look at just the index of the REITs. You see my favorite chart pattern. I am green. So I've been green on the REITs from an index since a close of 101. So about 20% move. I've stayed green in the Bongo, and I just had a new Kahuna come in off of support with a mobile breakout from a squeeze. There were a lot of REITs that made my buy watch list this week. Now I see why. Application software. How do you not love Activision? Would have loved it more back here, but it just flipped to a green weekly Bongo. Had some pocket pivots. OBV is strong. Not great in the constant earnings per share, but gets pumps up and down. Got some big numbers coming in November. Workaday looks like it's breaking out. Electronic Arts breaking out. Viva, a cloud-based software, pulled back after blowout earnings. I bet this one's going to go higher. All I need is some momentum to come in. Applications, Mobo, how did I miss that one? Mobo is one that I'm also in. It's one of these, this is I think a Chinese social media platform. Looks like it's getting long in the tooth. And how did my Bongo do me here? You tell me. 13 to 26. Back. Internet media. Sina, Chinese internet play. Great earnings per share growth, breaking out to recent highs. If I remember correctly, this used to be a higher stock, although I don't know how many. Yeah, used to be a little bit higher stock going back into 13s. Again, broken record time. You would have gotten in here with a green daily bongo, a weekly bongo rather, at about 47. You would have gotten out here pretty much a wash, maybe lost a buck or two. You would have gotten back in at 49, at 50 rather. You would have gotten out here at a break even. You would have gotten back in here at 51, and then you would have captured the move. It doesn't work in chop. It keeps you in and out of the market, but you don't have much wins or losses. It's designed that when the stock starts to trend is when it's your friend. From 51 to 81 in a few short months. Cena looks great. YY breaking out, perhaps. Sort of had a shooting star-like pattern on Friday. I'd love to see this bounce on the 50 and then take off from here. I'll be watching YY. Twitter. I'm not a Twitterian. I don't use it. I don't get it. I don't know how they make any money. In fact, they don't make any money. I don't like holding on to things forever because they are takeout candidates. On the other hand, there are people making money, and it's on a weekly bongo buy ever since 1587, and it's currently sitting at 1955. So that's 30% move on this bongo buy. I'm not a Twitterian. Baidu broke out above the 200. Great group strength. Looks very good here. Google, one of these, maybe Baidu is going to come in and replace LinkedIn. I'm going to have to decide what I'm going to bring in. But Google, pull back up here. Lots of dojis in a row. PSA reversal and pocket pivots. Google looks like it wants to go higher. And then Facebook, which is one of my larger holdings, not as tight as I'd like it to be. Looks like it's setting up to run again as well. Communications equipment. I think it's good for the market when Apple looks this strong. Apple looks like it wants to run. And again, trending markets. Bongo went positive here at 95. It's still positive on the weekly at 107. I call this out all the time because for those of us that want to have a life, that aren't at our computer all the time, that are looking for a free timing indicator that actually has some value, it's sitting here in HGSI. And if you ever come to my meetings, I give out the secret code. And you can program it in any other platform. And I use it in other platforms as well. Sienna, old name, nice looking pattern. Cisco, old name, nice looking pattern. Blocks breaking out here. All right. And then here's one that's the crazy one of the year. This looks a lot like that Resolute Energy, but I got a feeling they have more of a company. This was an IPO. I'm just curious, ACIA. I've not looked at this one here. Yeah, you wonder why the stock is doing so well. Expecting $2.67 in 2016, growth rate of nearly 200%, and it's trading at a multiple of about 60, which is a third of the growth rate. The problem is the growth rate's coming down in 2017, estimated. But this has been a high flyer. And like Resolute Energy, these are fun. Momo is one of them as well. They take a lot of work, and I usually trade them, almost day trade them, going down to intraday charts. And this is what I do every day in the 10th one infrastructure. So this is the antivirus. This was interesting. Palo Alto Networks sold off hard on earnings and right back up to where it was 2 days later. sitting right below the 200, strong group strength in a weekly bongo green that didn't revert because of earnings. Don't like its earnings per share growth, but this is the big kahuna in a important group that looks interesting here. ServiceNow is another one. Uptrend, sideways on support, PSA reversal, squeeze. Everything green up there. Pocket pivot and kahuna. I like that one a lot. FireEye, try to find one checkpoint. And we'll come back to CyberArk, but uptrend, pullback to support, pocket pivot, kahuna in a weekly bongo. You're going to see this one again, hint, hint. That's the top 10 groups. When I'm on my own, I might go further down into the list. So what I've done now is I've gone through. Another one of my favorite things to do is the group inclusion filter. And I'm not going to work you through it. But one of the things that you get out of the group inclusion filter are some of the top stocks right now. I call those my GAF All-Stars. Let's take a look at those and see. These are some of the leaders in the market right now. I look at these on another nightly basis. I look at my top 10 groups. I take the top stocks out of those. I run a couple of specific scans. I run the group inclusion filter, and that's what I play with. Mercado Libre, the eBay of South America, breaking out to new highs. Don't like the earnings per share growth. What a beautiful chart. And oh yeah, broken record time. In at 106, now 189, and this is since March. Mercado Libre. Amazon.com, this is the stock of the week from last week. Continues to a prolonged sideways, but a little bit of an uptrend bent to it. Pocket pivots, everything's green above. I expect it to go higher. Viva System, that cloud play, up on earnings, pull back. Facebook, we just looked at. Reynolds American, hard for me to buy tobacco stocks, being that I'm a cancer doc. But pull back to support, PSA reversal, mobile breakout from a squeeze. Pocket pivot, kahuna, still weekly bongos red, pays a 3.3% dividend. Momo, we looked at, another one of these big move up plays. Cypress Semiconductors, we looked at this already. Tyson Foods, I guess this is the chicken people. You're in a green bongo, you had a mobile breakout from a squeeze off the 17-day with a pocket pivot and a kahuna. Weibo, another internet communications play. This is another big mover that I know a lot of can slimmers have been attacking. Multiple pocket pivots, super strong volume, everything is green. Parsley Energy, don't know much about this except it shows up on my scans, but I've already got all my energy positions and it wasn't so much stronger than my existing stuff, so I wasn't going to trade it out. But in a very powerful move, again, scan for new weekly bongos, picked it up down here at 17.96, and now it's 34, a double in 6 months. BZUN IT Services, don't know anything about this, but you got to love the takeoff here. 423,000 shares on a big day. This is one of these stocks that I'm look at the share count now down on the bottom. 438, 74, 176, 82, 320. You know, these are one of these stocks that were quiet that nobody paid attention to. I mean, we're seeing days less than, there's 38,000, 49,000 shares. And then all of a sudden you get over here and all of a sudden somebody discovered them and now they're above 1,500,000. I don't usually chase these. This one is having a nice move. I never would have picked it up here because it never would have made my filters for price and volume. Silicon Motion, this has been a great play over a while now. From 12 all the way up to 52. It's in a pullback to support, kahuna, pocket pivot off the 50. PSA reversal to mobile breakout. I bet you this coming week it turns green on the weekly bongos. Just a hint. Just a hint. Acalera, I showed you this one before, high moving, cheap semiconductor stock. Adobe, another old name. So this is my typical buy point right here. Okay, a Kahuna PSA reversal off the 50, mobile breakout from a squeeze with a weekly bongo green above it. I use the weekly bongo several different ways. I will use it to screen for stocks that are changing, and I use it as a filter. I try not to go long when the weekly bongo is red. I will, but I have to think about it first. Log me in as a takeout. NVIDIA, another super strong semiconductor stock. Wow. Market access. You want to see lower left, upper right tight. This is sort of the definition of a lower left, upper right tight stock. Expensive stock. I wouldn't be chasing it here necessarily, but what a beautiful run. Arista Networks, a little bit more choppy, but in a nice run up here. Cintas Corporation, I think they make clothes, rental clothes for corporations. It's a growth stock. Look at that. Paycom, another one, broke out back here with a series of kahunas, pocket pivots, and has had a huge run. Of course, I owned it all back here and got stopped out 10 times and didn't participate in the run-up. Berry Plastics looks about the same pattern. 5.9, beautiful left to right. A.O. Smith, lower left, upper right-hand corner. Here's a REIT, same pattern. Patrick Industries ran up, sideways. Interesting buy point here, perhaps. Weekly here, mobile breakout, moving up off the 50-day moving average. A couple more. Terran International Educational Services, sort of putting in a flag here. Kind of a loose chart, not my cup of tea. Exactly has earnings this week, so definitely not my cup of tea. Sideways move. Move off the 50 looks great, except it's got earnings this week. CryoLife, don't really get this, sort of a high type flag here, and looks like it wants to break out and go higher. Carbonite, big move up, and Gigamon move up, pull back to support. Had a kahuna come in on Friday. So I'm not really looking at these that closely, but I wanted to show you that it's as simple as doing this. Tools. Except it's not in the warehouse, it's in the designer. Tools. Group inclusion report. Clear. Load selection. And top 50 GR groups. This is how it comes in the program. And then I typically come back here. I ran on a different computer, so it might be a little bit different result, especially on the bottom half. I'll include the MarketSmith. I'll hit OK, and we'll just see what it looks like. And this is going to give me a list of the top stocks in the market right now. So if I don't have a lot of time and I just want to know the stocks that have all the momentum, all I got to do is run the group inclusion filter. Simple, 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 simple thing. And it's one of my favorite ways of finding winners. Thank you, Ron Brown. Let me show you a couple other things. All right, let's go to all stocks. And we're almost done. And I've got ranked by scorecard. So now what I want to do, let's see if I can figure this out. First I want to sort by ERG. Oh, sort by raw combo rank. Then I want to sort by Bongo Weekly. And then I want to sort by days since change. All right. So what I should have done, let's see if that worked right. want this to be descending there. I like it to be descending here. And I like it to be, all right, well, I don't think it did it, so I'll do it manually. So this are all my, I want just Bongo weeklies, and I want to look at days. All right, so I got to play with that. But basically, I could look at all the stocks that are Bongo weekly, and I can find stocks, and these are, look for things. Here's one that just changed. Acacia Realty Trust. Days since change Bongo Weekly 0. So this should be a brand new Bongo Weekly. So here's a stock in an uptrend, pull back to support a kahuna. So I could create a scan that says, what the heck? I'm in a generous mood today. Let's go a new scan, new filter. If Bongo Weekly equals yes, and days since change let's give it 2 weeks, days 10. Let's make it 6. Recent Bongo Weekly change. Okay, hit OK. So now I'm down to 452 stocks. Let's rank them by scorecard. Go up here. And this will be some of the better stocks that have a new Bongo Weekly within the last 5 days. And now I can go through these stocks and look at, see if there's anything here that had a new Bongo Weekly within 5 days that looks compelling. All right. I'm getting tired. You're getting tired of listening to me. I can tell. I can see it on the phone. I made a comment about on my scans I didn't have a whole lot of bearish stocks. So let's just go to my scanner base. Let's look at buy number 1. Buy number 1 is our stocks that have a new PPS buy signal when the weekly's in a buy mode. So if the weekly's going up, the daily went to a sell, and then it has a new signal as a buy. That's pretty much a short-term pullback in an uptrend. On buy signal number 1, to make sure I have, oh, it's the old one. Never mind, I didn't update it. Hold on, I can do that very quickly. Backup, restore archive. I'm going to stop the tape for a second. Actually, I'm going to show you what I'm doing. Doesn't matter. Browse. Go to my... I knew I forgot to do something. All right, this will take a second. All right, it's Jeff. I'm back, and I just updated my scans. What I do is I run my scans on one machine. I save them as an archive, and I have a lot of machines. This way I save a lot of computer time. And I just restore them. All right, so this is a daily buy when weekly's in a buy mode. Notice who's up top, our friend Mr. Apple. 185. Now let's look at sell number 1, 3. Let's look at high close dojis daily 2, which is when weekly's in a buy mode. 158. Let's look at low close dojis daily 2, 5, including TZA the bearish signal. Let's look at buy signal 5. This is when you have a daily buy signal and you have OBV moving up. So trying to find when volume is supporting. And we got 25. Sell 5s. I got 1. Let's just take all the buy signals. No filter. Daily buy. We got 368. And sells, sell 4, we got 9. That's crazy. All right. Let's go down here. Mobile breakdowns. We got quite a few. We got 71. Mobile breakouts. 726. Red candle highs, a sign of an extended market, one that's potentially pulling back. We got 89. Green candle lows, we only have 16. Now that's interesting, but I think that's because we have very few stocks that are coming off bottoms. Most of the stocks that we follow have been breaking out already. That one is kind of interesting. We had 13 viable gap ups, and then look at mobile breakouts, breakdowns at a squeeze. We had 9 breakouts at a squeeze. We had 275. So the scans are overwhelmingly positive. Now, one of the questions people ask me is, how do I use John's radar during the week? So I'll show you kind of what I'm doing. If you hadn't already figured out, the stock of the week this week is CyberArk. So when I'm watching during the day, I'm just going to highlight this pattern right here. This tells me that prior to the last day of trading, or today's day of trading, which would still be Friday, that CyberArk was in a downtrend. On the weekly, CyberArk is in an uptrend. That's nice to see. Okay. So it's in an uptrend, short-term pullback, and during that, the fact that this is flashing, it tells me on the last day traded, Friday, at 9 o'clock in the morning on Monday, or Tuesday rather, it'll stop flashing. Flashing says it's a brand new signal, and it also had a high close doji. So what I'm basically doing is intraday looking for new flashing signals. They're not all crazy, everything flashing like they were this week. And what I would have seen was that here it is on Friday, a brand new buy signal and a high close doji. So I'm able to monitor hundreds of stocks looking for patterns and also looking, gosh, here's a group where almost every stock is now reversed to the upside. That's interesting. Another group, staples. Another group, oh, these are the indexes and ETFs. Those are the sectors. So I identified on Friday, Cyber had the chance to take a position before the weekend ended. And let's go back to the PowerPoint. Let's talk about CyberArk. Again, these are educational only. Trading involves risks. In this case, I've already told you I already took the trade. My goal is not to provide stock tips, but to show you how I find stocks and trade them. So let's take a look at the end of the day on Friday, why I'm so high on CyberArk. Everything's green up top. The weekly bongo has been green for some time. We had a mobile breakout from a squeeze. We're not at the max on the high jump. OBV is extremely strong. We had a big move off of the 50-day moving average on Friday. We had, actually this is not OBV, this is a group strength. We'll look at OBV in a second. So group strength is strong. Positive day off the 50, a pocket pivot, and a kahuna. So a lot to like on Cyber. It's certainly not overly extended. On TradeStation, we had a HCD and a new PPS buy, which I picked up intraday. OBV is turned up on the daily, and it's moving up on the weekly. Here you could see my bongo daily, weekly, and monthly are green. So we just had a positive change on the daily bongo. Another volume indicators down there turning positive. I like that as well. What's not to like? So my plan is if it takes out 55.55 on Tuesday, I'm going to add to my position. My stop all the way down here at 51.60. I'm risking 7.1%. My target is 59.50. So how do I use my targets and my stops? Until I change my mind, and this has been a market where you run up and you reverse, I take half off when I hit my target. I let the rest run. I take my stop when I hit my target, move it up to my entree so I can't lose money on my initial purchases. And I try and get as much as I can going forward by letting part of my position run. My big winners come from that piece. Yes, I give up some gains because I ultimately get stopped out on some as well. Pug user group meeting, I'll be doing another one this week, this month, haven't decided when. And just to be clear, when I do my section of the user group, it'll be much more person related than HGSI, but it includes both. When John does his Pug group presentations, it's all Pug stuff. Kind of like my Friday versus his Saturday, Sunday, Monday at the meeting. Again, hgsidoc@gmail.com. I still could take a couple more people. I'm happy with the number. A few more is fine. And again, within the next week or so, you're going to get a note if you've paid about some of the details. See you all in Florida. Have a great week. Be good. Be safe. Have a happy Labor Day. And thank you all and goodbye.